Good morning, Steve O'Hare, and today is Monday the 10th of January 2022. Joe's not with us today, so I'm going to work my way through and have a look at the technical analysis around the markets. We're off to a slightly negative start now for the indices following non-farm payroll on Friday. So last week saw plenty of volatility for the markets in the wake of the latest Fed minutes, also as investors scramble to price in the likelihood of earlier rate rises in the US, as well as a much earlier start to the process of reducing the Fed's balance sheet. Despite a headline miss in Friday's jobs report, the rise in wages and the drop in unemployment has fueled fears of an overheating economy. While some of these concerns have eased over the weekend, it looks like 2022 will be a very different environment for monetary policy compared to its two immediate predecessors. An empty calendar today means that investors will continue to mull over last week's developments, but with the US and the Chinese CPI this week, and then earnings season kicking off on Friday, they will soon have other things to think about. So that's headlines. That's courtesy of IG Morning Call, and we're going to dive straight into the charts. So let's take a look. What we're going to look at first, we'll start with the equities. Start with FTSE, and we can see this is the hourly chart. We can see this is Friday's close. Where? Here we go. Friday closed around about this level, 74.92. Sunday night's price action, a little bit of a move higher. And this chart doesn't show Sunday nights, but we've sort of seen a sell-off in the last hour. We can see this move lower, which is a bit of a concern. FTSE and DAX both on the back foot as we're opening up in the last hour. So let's take a look at the weekly charts. We posted a shooting star in the DAX last week. We hit the resistance level coming in at 16,300, made its way all the way up there and rejected it and closed lower, forming a shooting star. So potential for a double top formation if prices manage to get below the 14,800 to 14,900 level. FTSE, on the other hand, with the bank stocks performing well, obviously down to the interest rate hopes that they will rise from the bank's perspective. So they've continued higher, although negative start this morning. The Dow Jones also posted a shooting star after hitting a new all-time high just below the 37,000 level, 36,955. That was the high, rejected and has moved lower. We can see this a clear shooting star, looking to get that follow through this week to form a shooting star formation. The weekly chart in the Nasdaq was really pressured. The tech stocks taking a big hit. We've got this support coming in at 15,555. For me, a break of here could open up quite a sharp, intensive sell-off. We did get a shooting star type candle last week, so this evening's doji star formation has formed. Also, this will equate to a double top. So we got the we've got the negative price action here and here. This will leave a neckline at 15,550. A break of there should lead to an extended move lower, and we'll measure that as something along these lines, really targeting the next support level down at 14,000. Well, this is measured move target is 14,300, but coming in at 14,450, there is support there. So around about that level. So watch that carefully this morning. We can see that it's breaking down quite aggressively as we speak. That'll be my gun to the head challenge. Should I do that now? You know what? I might do it now because I am a little bit concerned by the time I finish. We could be under a lot of pressure. So 15,000, get short of 15,549.4. Well, it's rounded to 50 to make it a little bit cleaner. Stop level could be 2,200 points. Quite a big stop level, but my target level is all the way down around about here. So we're targeting 1,000-point move. That'd be interesting on a Monday morning. So that's my trade of the day. I'm just putting it in here so I don't have to worry too much about it later in the call. Ping that over to Joe, who's in his sick bed at the moment. Right, let's crack on with the rest of the markets. So also looking at the weekly charts on China 50. Remember this level I've been talking about for a long time. Feels like about 6 months. 14,500. We've seen this negative price action over the last few weeks and starting this year off. A bit of support below, but I still believe we've got potential to break below the support level over the coming days, weeks, and look to target this upward trending support a bit further down. So that's indices. Let's take a look at cryptos and where is Bitcoin this morning. We have formed this head and shoulders formation. We've broken below the neckline. We closed below the neckline on Sunday night. That's the end of the crypto week. Monday morning, start of a new week, and we're looking for this to extend. We could get a potential for a retest of the break of the neckline. That comes in around about 43,400. However, short-term charts looking pretty ropey. Let's look at the daily chart, and we have tested this long-term support level. We go all the way back to October 2020. We had the dip down here, and this has formed an upward trend line. So really looking to break below there to really get the flush out that I'm expecting. I do expect a retest of at some point of 28,800. Potentially we get a stall in the sell-off here, maybe a rally back. 52,700 around about that level would be the resistance, and plenty of resistance on the way up to there. But yeah, looking negative on Bitcoin. Ethereum slightly the same. Yesterday's price action was positive, but it was basically an inside day, a positive inside day, and really support coming in at 2,990, 2,990, and below there we got the 61.8% fib coming in at 2,910, but more sort of stronger support coming in below there around about 2650. Ripple under pressure as the 78.6 fib retracement level holding at the moment. That comes in at 70 cents. A break below there opens up a move all the way back to retrace, make a full retracement of the rally from July 21 up to September 21. This really strong aggressive rally looking to dissipate. Cardano has broken down through the support level of the 120 level, and we have hit a new low the 8th of January. That's the lowest we've been since the 21st of July last year. So negative on Cardano as well. Potentially that upward trending resistance turns into, sorry, upward trending support turns into resistance now. Right, let's look at commodities, and this morning we are looking at WTI crude oil. Negative, almost a shooting star type candle on Friday after the non-farm payrolls, and we are holding around about levels we closed at on Friday. We've had this really decent rally up into resistance, stalled in front of the 78.6 Fibonacci resistance and rejected lower. So potential for further downside there. Same sort of formation that we've got, this head and shoulders type formation, and we saw the rejection on Friday. Really looking to see whether oil will try and buck the trend and continue higher, or will be rejected by this stalling momentum, which is seen this rally, this ABC correction, looking for this further larger correction lower. Natural gas has had a gap open on the chart. Friday we closed at 382, and we've opened up today at 397. So that's positive. Really, we're looking at this 404 level as resistance. A break above there should maybe put an end to this negativity that we've seen since the early part of December. It's gone on for about a month now, and really looking for a break of this range. This could be correcting higher. Looking very positive this morning. It would be better to fill that gap down to 386. On gold, still trading around about the $1,800 level. It's been quite an influence really for a good 6 months now, since we broke down below this support from the highs of last year. Yeah, 1800 really sort of like creating that pivot level. 1834 above acts as good resistance. We've got this upward trending support line coming in. That's showing the tentative upward trending support coming in at 1769 to 1770. Really need to get a break of 1783 before that opens up. But yeah, overall, we are long-term bullish of gold, but short-term bearish, expecting maybe potentially another revisit down towards the 1675 level. Last week's candle, bearish outside candle, is a very negative for sentiment. So I think that negativity could continue through last week. Maybe we'll get some positive moves on the dollar index side of things, which dollar index weekly chart here, we saw a rejection of the gains last week. So that's a bit indecisive. Off to a slightly better start this morning. We can see from the 1 hour chart, we've reacted nicely higher here, although the last hour has given up those gains. Looking at euro dollar, seeing the head and shoulders formation played out really nicely, and we've hit the measured move target, also trading around the 61.8% retracement of the move from the lows of March 20 to the highs of Jan 20, and we're seeing a really nice correction into that. So holding around here, potential for further downside, but we may have stalled slightly. We can see the momentum has stalled. We've got a MACD crossover as well. So potential for Eurodollar to be supported around these levels, maybe have some sort of corrective move higher before the sell-off continues. Similar sort of price action in sterling dollar in cable. We've had the market stall at the 38.2% Fibonacci retracement. So obviously cable has performed better on a comparable basis, and we saw this morning doji star formation form and a real nice reaction up into there. The MACD crossover a little bit more advanced than the euro dollar. Dollar yen has continued higher. We've had this flag formation form. We can actually redraw that. That flag formation has formed and looks pretty decent. If we take that and project it higher, the measured move target for this is around about 118, trading currently at 115.66. We can see last week's candle was a shooting star candle, but we really need to have that sort of confirmation of negative price action this week. So we'll have to wait and see how that plays out. The last few days of last week, the Wednesday, Thursday, Friday, were negative, but off to a more supported start this morning after we hit the previous resistance level, which has turned into support now. That came in at 24th of November. And Aussie dollar rolling over to the downside again. We've rejected the rally, and on the sort of like daily, weekly basis, let's take a look at the weekly chart. That's formed a bearish outside, bearish engulfing candle. That's the safest thing to say. But this is part of this head and shoulders formation. We got the break of the head and shoulders formation the week of the 22nd of November. We've rallied back. We've retested the neckline, and it looks potentially that Aussie dollar could continue lower. So that sort of covers the markets that we're looking at this morning. As I say, the gun to the head trade idea is let's jump back to it. Nasdaq, how was that worth jumping in early? doesn't look like it at the moment. Yeah, so Nasdaq slightly offside from where we were looking at, and but looking for potential to move lower, a bit of an aggressive move lower. I'm looking for stop on that is 15,750. So what we're expecting out, no real things on the economic calendar. Corporate highlights: Hikma Pharmaceuticals has launched a new sterile compounding business providing injectable medications to US patients. Assura said that the performance has been strong in Q3 with its portfolio of properties growing, while a further 22 schemes are in the pipeline. Avecta paused the sale of its COVID-19 test following a drop in performance when detecting the Omicron variant compared to previous mutations. So a little bit negative on that side of things. Biggest gainers on the last session: Aston Martin, Accenture, Clarkson, Sentiment, and biggest fallers: 91, Kainos, Bridgepoint, and CNC Group. So that's it for today. Look forward to seeing you again tomorrow. Maybe Joe will be back, and take it easy trading a day. Good luck with everything. Cheers.